This week in the market, some updates from the USDA on cattle stocks and the current state of our row crops. Also, Dr. Will Maples, MSU Extension livestock economist, talks more about current cattle and beef prices, how the markets are balancing supply and demand, and what we can look forward to the coming years as the herd rebuilds. But first, here's the Cattle on Feed and Crop Progress reports. In this month's Cattle on Feed report, more trending down in numbers reflecting this year's continued slide. Cattle and calves on feed for the slaughter market totaled about 11 million head, down 2% from August last year. Placements in feedlots during July totaled a bit over 1.5 million head, 6% down from last year. Marketings of fed cattle during July totaled 1.75 million head, 6% down from last year. Other disappearance, which are losses due to death, movements to other feedlots or pasture, or natural causes, down 9% compared to last year. In the 18 highest corn-producing states, dough stage, which is when the kernels accumulate starch and thicken, at 83%, the same as this time last year, but 1% lower than the 4-year average. Dented stage, when the kernels start to form a dent at their crown due to starch amount and moisture loss, at 44%. Also the same as last year and the 4-year average. Condition looking pretty good, with 65% reporting good to excellent. In the 18 highest soybean producing states, Mississippi included, setting pods at 89%, 1% higher than this time last year, and the same as the 4-year average. Condition also positive, with 67% reporting good to excellent. In the 15 highest cotton-producing states, Mississippi also included, setting bolls stage, which is when the fertilized flowers turn into bolls, at 81%, 7% lower than this time last year, and 6% lower than the 4-year average. Condition not very encouraging, with 40% reporting good to excellent.
I think beef prices are going to continue to go up. Because you think about how long it takes for beef supplies to change, cattle supplies haven't even changed yet. And beef supplies are always a lag to cattle supplies. So once you really start expanding the herd, it still takes a while for those new calves to turn into beef production. So I think we're in a period of higher beef prices for quite a while. It could be the next couple of years before we really start to see beef supplies change significantly. So I think this is where we got to be a little bit careful about what we call demand. And so if we look back, 2013, 2014, we had low cattle supplies at those times, and then we ended up with low beef supplies because of that. And so you saw per capita consumption of beef drop. And so there was a lot of discussion about, people aren't eating as much beef, they don't like beef as much, they don't demand beef as much. I would suggest that per capita consumption was lower because beef production was lower. So there was less out there for us to eat. And so I think that's what's happening here too. I do think we're gonna see per capita consumption of beef go down because we're producing less of it. It's just not out there. That doesn't mean that beef demand has decreased, because the beef that is out there, people are paying a lot of money for. And so beef demand has still been quite strong, even though we may see people eat less of it.
And that's it for a deeper look into the markets. Looks like cotton's going to continue having a rough year, while beef cattle something of a mini boom in prices. But as we certainly know, prices can only get so high before the consumers simply can't afford it. And that's when the big drop comes.